Good afternoon, everybody. It's the Gold, Ghosts, and Guns live stream hour. I'm going to talk about a variety of things today. I hope that many of you can join me. We'll see how this thing shakes out. Still getting used to the interface over here at YouTube, so just be patient as we get started. Well, a couple of things I want to talk about today. And I want to get a... I should get the there we go. All right, so anybody who's in the chat, give me a pop, give me a note in the chat to let me know that you're here. But today I want to talk about Gary Cohn and trade deficits and why they don't matter and all of that heavy stuff, because it really is important, because I think that there's a lot of misconceptions, a lot of misunderstandings about why it is that these ideas, why these things are, one, they're interrelated, but two, why it's not really that important per se. The trade deficit is really a tremendous misnomer and a tremendous kind of, that's the word I'm looking for. It's not misnomer is the wrong word for it, but it's kind of it's a terrible misdirection. And Trump's insistence on it. Good evening. Hi, DC, NetDrag. How are you guys doing this afternoon? It's important because I know Buck was complaining about this on Periscope the other night and almost derailed an entire geopolitics argument discussion about the trade deficit and why we need tariffs and all of this happy shit. And to be honest with you, it's an easy mistake to make, which is to look at the first order problem. And let's start with the beginning of why I don't agree with tariffs. I actually have to like take a shower now and say that I agree with Gary Cohn about something, because Gary Cohn is an evil, vile globalist vampire squid banker. He's horrible. He's exactly what's wrong with the United States banking system and everything else. Goldman Sachs is actually the real problem here. But let's back up for a second and let's just remember one thing, which is that the fundamental thesis is that tariffs are a band-aid on a fundamental or structural problem. Okay, they are not a solution to a problem. Okay, and I'm going to go into this in detail in a bit, but let's just talk about what I think is going on with Cohn and why he's gone and why it's a good thing, and then we'll get into like the hardcore economics of the thing. So, because it's almost like we're going to do three parts today. First, we're going to talk about Gary Cohn, then we're going to talk about why trade deficits don't matter, and then we're going to talk, and then once we've built on that, we're going to talk about why tariffs don't solve the problem. Okay, so that's what's on tap for today, and I hope you all stick with me for the duration of it. Hopefully, I can do all that in 30 to 35 minutes, because I really don't want to do this forever in a day. All right, so Gary Cohn. The first thing to remember here is that him leaving the White House, great. It's a fantastic thing. If we can get rid of Mnuchin next, that'd be great. Otherwise, Mnuchin is going to be looking at the situation going, okay, I guess Goldman's not going to run the banking system, because Cohn just left in a snit, and he's been threatening to do this since the day he took over. He's been pulling this I don't like what Trump is doing and I'm going to quit thing for months now. If you remember that he tried to virtue signal over Trump's lack of response over Charlottesville, for example, which was just insane. The truth is that Goldman Sachs is really the problem, okay? And I know a lot of people want to believe it's like the Rothschilds are still running the world's banking system behind the scenes, and that's why we're trying to take out North Korea and Iran and all this stuff, because they're the only countries left with, without Rothschild-controlled central banks left, and yada yada. I'm like, look, I'm with Martin Armstrong on this, and yeah, I took Martin to task yesterday in a blog about Russia, but I absolutely agree with Martin about this. He's like, dude, really, seriously, the Rothschilds are last century. You worry about Goldman Sachs because they're the elephant in the room with the actual power, as opposed to the ones that are right. Let's deal with the real Death Star. Let's not deal with the one that they're still building, or let's not deal with the one that we've already blown up, because honestly, let's deal with the new one. So Cohn is a classic Goldmanite, and and Goldman has extensive investments in China. They have extensive investments over in EU and everywhere else. And so them Trump putting tariffs on steel and aluminum tariffs on, and going after the trade imbalances between the United States and China, not for trade deficit purposes, but fundamentally for what Trump is truly complaining about, which is that there is a mismatch in the tariff structure, which does put our domestic producers at a disadvantage. And it does put, not just our steel producers, but our car industry and a variety of other industries at a disadvantage. And it's done on purpose. And and Goldman is behind and has been behind the creation of things like the TTIP, which is, basically NAFTA for Europe, and the TPP, which is even worse, and all of this stuff, and all of these bad trade deals that Trump keeps talking about. And don't ever forget that Goldman is the main market maker for carbon credits as well, and that ties into the Paris Accord and all of that stuff. So, yeah, I mean, Blair, you're right. Goldman is trying to forge a one world order with them in charge, and it is effectively true. I really do believe that Goldman is one of the leaders in this field, are leaders in this push. I don't think they're the only ones, mind you. I think that I just think that they're the ones that have manipulated the American political system over the last 20 to 25 years very effectively to push themselves into positions of power. The last generation it was Citigroup and whatnot. Now it's Goldman, right? So it was Citigroup and JP Morgan for a while. Now it's Goldman who's in charge. And remember, these guys are all fighting amongst themselves for market share and for political dominance and everything else. So don't kid yourselves. They're not all on the same page. They do fight for dominance and control over the Federal Reserve and everything else. So it's very important to understand that at the end of the day, when this thing really starts to let loose and the sovereign debt crisis starts to eat banks, that they will eat each other. Okay, it just will happen. And it's going to be really funny to watch the process of them eating each other as they all scramble to try and save themselves. And Goldman has been at the forefront of rewriting legislation to their advantage, certainly like things like Dodd-Frank, and a lot of the new SEC rules on crypto. It's all about Goldman. Okay, so now Trump's standing up to Cohn and saying, look, I'm not going to be persuaded by Globalist Gary and the vampire squid on this. I'm just not going to be. Okay, I don't give a shit how much money my son-in-law owes you guys. We're not doing this. Okay, this is bad for America. Right? Now, I like the fact that he's standing up to Goldman on this front. Do I think that tariffs are the way to do that? No. Okay? But I understand the tactics, and I understand that this is the easy way to rile up the base, because if you read the comment threads on Breitbart, which I just did for like 15 minutes, and then I had to go take a shower, you'll see where American conservatives are on this. They really do believe that that trade deficits matter and that tariffs are a good thing. They really do believe this. And a lot of people I know who are my regular followers, a lot of them believe it. A lot of y'all believe it as well. And I'm going to try and red pill on this issue today and try and just give some raw, everyday, good old solid Austrian economics as to why this is not the important part, and why focusing on the trade deficit and how to fix it through tariff, quote unquote, equalization is the wrong way of going about it. The right way of going about it is what Trump's already been doing. Lowering the corporate tax rate, getting rid of various regulatory schemes, disempowering a lot of the regulatory agencies within the United States in order to bring the functional cost of capital to bring these basic goods to market. That's the path. Okay, so let's start with why the trade deficit doesn't matter. Ultimately, a bilateral trade deficit with China is not an issue. I mean, at the end of the day, it's really not an issue because the money flows around, okay? And the trade deficit is if it's a persistent trade deficit, and remember, we are the world's reserve currency. So if you want to liquefy global trade and remain the world's reserve currency and have a dominant banking system around that dominates around the world, then you kind of have to run persistent trade deficits. This is called Triffin's paradox, and you can look it up. Okay, and Triffin explained this as to why it needs to work this way. Currency continually has to flow out of a country, and its bond markets and the debt effectively has to continue to increase, because that's how new currency is produced. And therefore, in a debt-based fiat currency system, you have to produce trade deficits. The dominant currency can remain the dominant currency, the reserve currency of the world can remain that way if it's got a high value-added economy that allows for continual trade deficits with its trading partners in order to liquefy international trade. Because as we spend, as we trade and dollars go out, people finance via treasury debt. Okay. Now, at the same time, the Austrians will tell you that persistent trade deficits are a symptom of a deeper problem. And the deeper problem is that it's not the trade deficit that's the issue. It's the budget deficit that's the issue. And whenever you hear guys talk about, whenever you hear the economists talk about this, they always talk about the twin deficits, trade and budget. Because what they're trying to do is equate the trade deficit with the budget deficit in order to then slap on an easy reform policy of, hey, let's just put tariffs on. It's an easy way to sell the argument without having to do the hard work, which is to disempower the lobbying groups who are actually, and the government agencies that are actually causing the problem in the first place, which is that we're spending too much freaking money. Because Congress doesn't want to spend less money. Because if Congress actually spent less money, then congressmen wouldn't be able to give out pelf and favors and privilege and everything else, and then take in all the fat lobbying money and all of those vectors of corruption. So at the end of the day, that's the main issue. They'll always try and tie the trade deficit problem to the budget deficit problem, which is correct. That at a certain level, the budget deficit is the problem. The trade deficit isn't necessarily a problem. It should ebb and flow. And if we're going to maintain, and as a policy, if we choose that we want to continue to run the world's reserve currency and liquefy global trade via the dollar, then we have to run, over the course of time, we have to run a negative trade balance. Because it's the other way, otherwise it's just, there's not going to be enough currency to liquefy global trade. And then the people will have to start looking for other currencies to do so. So, I just tweeted out a while ago a quote from an article by Robert Bloom. And if you do a Bing search, I did a Bing search because I don't use Google. But if you even do a Google search, you will find that if you type in trade deficits don't matter, the first thing that will come up is an article from the Mises Institute explaining why trade deficits don't matter with the quote that I just tweeted out, which is that trade deficits don't matter as long as the country's trading partner is willing to finance the deficit. Right? If you run a trade deficit, dollars go out. Those dollars build up as a function, as the dollars build up in the current account, the capital account of the receiving country, and then they got to turn those dollars into something, so they turn around and buy U.S. Treasury bonds with them and invest in our debt. And as long as they think that we're capable of producing value add, right, with this trade, then they're going to continue to finance our debt. They're going to buy our debt, which will allow us to print more currency, which will allow us to lever up the banking system and do all the other things that we're going to do with this. And therefore, everything can continue. But the minute that our economy is not a capital producing, a wealth producing engine, when it's not creating a higher value added proposition than our trading partners, then that's going to change, and that's going to slow the rate at which dollars build up overseas, because we're going to see trade move in other areas. Okay, so now that should pretty much explain why the trade deficit necessarily is not a problem. Now, it is a problem if you're constantly running a budget deficit, and therefore you're issuing debt to deal with your budget deficit on top of the trade deficit. What's interesting is that I just finished, and in that tweet that I put out a picture of I just got finished going over the Fed's weekly balance sheet statement, the H.4.1 report. which I'm a geek, and I chart every week, and I have multiple ways that I break it down. And I've got this enormous spreadsheet that goes back to like 2011 on this shit. And I just finished, and one of the charts that I produce on a regular basis is the balance of the balance of foreign-owned U.S. Treasury bonds held on reserve with the Federal Reserve. So when a foreign central bank, say Singapore, runs a trade surplus with us, gets a buildup of dollars, they turn around, they buy U.S. Treasury bonds. Now, they can do one of two things with those Treasury bonds. They can either repatriate them, bring them back to Singapore, collect the interest and everything, or they can leave them on account with the Fed. Now, when they leave them on account with the Fed, they really what they're saying is they want to leave them in a liquid state. They want to leave them in an easy way for them to be able to dump them onto the market if market conditions change. But what's important to understand is that they're all still buying Treasury bonds. With a weaker dollar and a persistent U.S. Trade deficit, which is getting worse, oh look, they're parking more Treasury bonds on reserve with the Federal Reserve because that's what you do. And it's a rational response to the current situation. So it all just plays out exactly the way it's supposed to. It's not really that big a deal. But it's easy to demagogue the issue, create all sorts of, and create headlines in order to demagogue and politicize the issue in a way that's not necessarily true and correct. Now, I know why Trump is doing this, because it's an easy way to sell it to his base. And I get that. And it's an easy way to start the process of blowing up these unfair trade deals. Okay? I don't necessarily think that he believes tariffs are a good idea. They just happen to be necessary if we're not going to resolve and restructure NAFTA and the rest of these trade deals. So from that perspective, I got no problem with him using it as a political football. It's kind of like he does this a lot. He takes a counterintuitive position, especially to conservatives or to Republicans, and certainly to Wall Street. He does it on purpose because he understands that by doing this, he's actually undermining all their arguments for globalism and everything else. He's doing it on purpose, even though his goal is not actually to put a 30% tariff on imported steel. Now, so understanding that, why are tariffs a bad idea? Let's think about it for a second. Tariffs are a bad idea for one reason and one reason alone. All they do is raise the cost of a particular good to consumers. And tariffs on primary commodities, really steel is like a tertiary commodity, right? First order goods. We economists talk in terms of first order good, second order good, third order good. A first order good would be berries that you collect off of your property, right? First order good. They're a primary resource. Sand. Primary resource. I go outside and I pick up a handful of sand, and I produced a handful of sand. What do I do with that? I make a fire and melt it and turn it into glass. Well, glass is now a second order good. I turned sand into glass. I turned berries into a pie. Okay, pies are second order goods. Steel is a third order good. We take iron ore, a primary good, turn it into pig iron, a secondary good. Add carbon, which is also a secondary good, right? Because we take wood and we burn it and we get carbon, and then we take carbon and we mix carbon with pig iron and we get steel, a tertiary good, a third order good. And then we use that steel to make like ships and cars and everything else. These are 12th or 13th order goods. Now, every time you go up an order, you're increasing the value add to consumers. Otherwise, there's no point in making the thing. Sand is not particularly useful. Glass is more useful, right? We use sand for other things, but let's just make it simple. Sand, not useful. Glass, you can make a window out of it. There's a value add there. So sand costs X. Glass costs 2X. A window costs probably 2.5 or 3X. Value add. Each time, profit for everybody up along the everybody gets to share in the profit all the way along the lines. Obviously, the person who collected the fire, the materials for the fire to make the glass, and the kiln and all that stuff. There's all that other stuff that goes along with it. But just for a simple argument process, we go from sand to glass to a window to lenses for glasses, cameras, the whole 9 yards, right? Okay, now, even though glasses are now mostly polycarbonate, but all right. So does it make sense to raise the cost of steel on car producers? No. You want me to sell more cars overseas? Does it matter that I pay? Now I understand the idea that, well, okay, so I'm going to pay an extra $2 or $3 per ton on for steel to use to make the car, right? What it means is, either Ford has to produce the same car, at the same price, which is driven by the market demand for cars, at a lower profit. So the steel producers are going to make money, but we're going to take it from the Ford investors. We're going to take the money from the Ford investors and hand it to U.S. Steel, because that's all that happens. So now the other question is, let's look at the situation. Let's look at the actual situation. China somehow is capable of producing steel at such a low price per ton that they can produce it in Yunnan province, ship it on rails over to the port in Guangdong, load it on a ship it halfway across the world to the port at Los Angeles, and then have it distributed along rail and road and everything else to steel producers in the to be melted by end users in the United States into other forms. What do you think is more expensive? Producing the steel or transporting it fucking halfway across the world and the logistics thereof? Just like natural gas, just like liquefied natural gas, you can produce for about $4 an MCF, a million cubic foot, million cubic feet. Got news for you. Japan pays $11 per MCF for liquefied natural gas. So it costs Cheniere $3 to $4 to produce it, and then it costs $7 to $8 to transport it halfway around the world to Japan. It's the same thing with steel. Shipping costs are, if there's one thing that's a constant in this world, it's the amount of money it costs to move ship by ship. It costs X number of barrels of oil to move a cargo ship container with X amount of weight, Y amount of weight on it, Z amount of miles. Because that situation, that market hasn't improved by 4% in the last century in terms of the energy costs to move a ship from one end of the world to the other. Because of the fundamental loss due to friction of moving a ship through water, which they haven't been able to overcome. Hell, I worked in this industry. Part of the nickel boron technology I was working on was the hope that it would reduce cavitation on turbines, or that we could coat the ships with it and the ships would slip through the water easier and all this. No. I mean, truthfully, there hasn't been a breakthrough in that technology until they put nuclear power plants on oil tankers or cargo ships. It's not going to, the energy cost of moving shit around the world is not going to change. It's a constant based on the price of oil. Lower the price of oil, the cheaper it is for China to ship steel halfway across the world to us. So now here's the question. If that's the case, why are we so unbelievable? Why is it so hard? If we're so great at producing steel, if our Virginia steel workers and Pennsylvania steel workers are so brilliant at their jobs, why is it so expensive for them to produce steel? Why can the Chinese do it so cheaply? I know, I've heard all the arguments before. Oh, well, they pay their people nothing. Fine, they do. But ask yourself the question. And I'm talking now about normalized for quality. Okay, I'm not going to bring in the quality argument that the Chinese steel is inferior to American steel and yada, yada, yada. It probably is on ton for ton. But I'm talking about similar quality steel. Tool steel or this steel or that steel, whatever, Hastelloy, it doesn't freaking matter. At the end of the day, there's so many alloys of steel out there, it's not even funny. We're just talking about, raw, we're talking about I-beam steel. We're talking about nice, everyday, 1031 freaking high carbon steel. Used in all sorts of shit. Okay? Now, why are we so bad at it? Why is it so expensive? Why can we not produce it at a reasonable rate? Why can we not overcome this tremendous cost? So the Chinese are producing steel for this amount, and the cost to transport it is this much. Why are we still up here? Can somebody answer me that question? And why is it that that difference is we have to make that up with a tariff so that everybody pays more, as opposed to taking the price, as opposed to changing the cost structure of U.S. steel such that it's down here, so that once that happens, the Chinese won't be able to dump. Exactly, DC regulations, unions, and everything else. Labor costs, pension costs, all of that stuff. Some of it is the fact that our steel workers are better trained and produce a better product. And for that, the market will reward them with higher wages than the Chinese. They will. The market will, always. The question is, are they really worth the amount of money that they're paying them? Or is it the fact that they can't attract steel workers in this economy for anything less than, say, oh, no, let's just pick a number, $20 an hour, $12, $15 an hour, $18 an hour. Why does it cost them $18? Why can they not attract labor at anything less than $18 an hour? Let's just call it $18 an hour. So what is that, about 40 grand a year? Why? Because that's what it costs that guy to live in the United States, because rents are too high. Why? Because globalists like fucking Gary Cohn are pulling at least 5 to 15% off of every fucking transaction that U.S. Steel engages in. Between brokers' fees and on the pension funds and the loan and the loans on the capex and a capex expansion and all this shit and everything. Fucking globalist banking cocksuckers like Gary Cohn are the ones actually making all the fucking money. When honestly, if we didn't have that situation, if the regulations were lower, if the union costs were lower, if all these other things were lower, if the environmental costs were lower, again, Goldman's in there looking for their fucking handout through carbon credits and every other damn environmental regulation, hoping to make money off of it. That's where the cost is. It does not cost us any more money to produce. I'm sorry, I just can't believe that it costs us any more money to produce a ton of freaking 1045 steel, high carbon steel, than the Chinese do. And that it's any better or worse. I just don't buy it. The cost is roughly the same. I mean, we have an iron ore industry here in the United States. What is the iron ore industry? Are they producing it at a market rate? No. Do we have to import the iron ore? Yes. Get rid of the froth. Get rid of the regulatory banking froth. All these assets that are overvalued, that the Federal Reserve is propping up through quantitative easing and all this other crap that Goldman argues for. And maybe, just maybe, we would have a rational cost structure for our primary goods in this country, or secondary, tertiary goods in this country, or those primary through third order goods that Trump is focusing on for political purposes. I mean, because look, I get it. Okay, he needs to shore up Western Pennsylvania for Republicans. I get it. Okay, if he wants to fully change the political landscape in Washington, he has to turn Pennsylvania permanently frickin' red. So that's why Republicans always go on this screed about wanting to raise tariffs against China or Canadian softwoods or whatever the hell it is, solar panels or what, I don't know, fucking fish. Okay, they do this shit all the time, and they do it on purpose. They do it to score cheap political points in midterm and off election years. And they do it it's done all the time. As opposed to actually fixing the system, because again, it's easier to do that, and God forbid the politicians say, no, we need to get rid of the regulations. No. Then all that those fat stacks of cash from the lobbyists and everybody else, that stuff dries up the minute, you're not on board with giving them a handout. That's what we're talking about here. That's what the issue is. Tariffs are a symptom. The need for tariffs are a symptom of a deeper functional problem. Because the truth of the matter is it makes no goddamn sense whatsoever for us to produce cotton here in the United States, ship it all the way to Cambodia to be turned into shirts so that Walmart can sell them to me at $3. It makes no sense. And yet it does. And it's that way because on the left, they're willing to pay untold amounts of money for environmental regulations to keep steel mills from new steel mills or new oil refineries or new nuclear power plants or new paper mills or whatever because of the environmental devastation, man. Let's just push all that shit off onto China. And then everybody complains that there's no damn jobs or there's no jobs that they're qualified for. And then the conservatives turn around and say, well, we need to put tariffs on China because they're not playing fair. They are playing fair. Well, mostly. I'm not saying the Chinese are playing completely fair. I know that they're playing hanky-panky with tariffs and everything else. And a closed capital account and how they quote unquote manipulate the yuan and all this other stuff. But whatever. None of that at the end of the day matters. When the truth of the matter is that if we could cut costs within the United States by 25 to 30% across the board, and Trump already started this process. That's what the 21% corporate tax rate is about. He doesn't need fucking tariffs. He's already got the big one right there. Make U.S. steel more competitive by dropping their tax rate by an unbelievable amount of money. Let them actually retain some of their freaking earnings so that they can do capital improvements and improve their efficiency. Because once you slap a tariff on once you slap a tariff on steel, all you're doing to U.S. Steel is telling them, well, they don't really need to produce. They don't need to innovate. They don't need to improve. They don't need to fire bad workers. They don't need to fire bad middle managers because they're getting a subsidy from the government. They're getting a subsidy from the taxpayer. They're getting a subsidy from Ford. You're paying for it. And as long as you're comfortable paying for it, then you can be then you can be in favor of tariffs. But I'm not comfortable paying for it. I don't think anybody deserves that kind of support. Nobody. If your ideas suck, if your performance sucks, you shouldn't get paid. It's just that simple. And so sitting here arguing about differences in labor rates and everything else does not matter when the truth of the matter is that China's halfway across the freaking world. And it's expensive to move steel by ship halfway across the world. The reason the labor rates are so disparate is because, one, Chinese labor is not skilled. Okay? Relatively speaking. That's the first part. And as they move up the value chain and as they become more skilled, I got news for you, their wages rise. The Chinese have already been going through this. They're already dealing with this process. 6 years ago, I was studying the effect of China outsourcing so much of their stuff to Vietnam and to Cambodia and Laos and trying to colonize those countries simply because they needed a way, because their labor rates were already getting too high for the banking system to afford, because they blew this freaking immense economic bubble through unsustainable mercantilist policies up until the point where labor started to rise in value to the point where they couldn't sustain it anymore. So now they had to do the globalist thing and start buying cheap Vietnamese labor, cheap Cambodian labor, cheap Laotian labor, which is exactly what they're doing, by the way. And they've been doing it for years. Japanese, same thing. Before Abe came to power, Japan had a way out of their problem, had a way out of their demographic nightmare, because you guys all know that at the end of the day that the Japanese are really old. As a society, they're really old. So how are they going to they've got all these people who are at the the demographic shift within a society. As you get older, your wages rise because you're more skilled and you're more valuable. Well, as your society ages, so does the cost of labor. Well, the Japanese, when the yen was sitting there at 75, I watched them use the yen at 75 back in 2012 to be buying up whole swaths of industrial parks all over freaking Vietnam and Cambodia and the rest of it. And they were doing it on purpose. They were buying access to young, vibrant, unskilled labor in Vietnam in order to train it and to train those people. And basically they were outsourcing their demographic problem in the same way that we did for 20 years with China. That's all it is. That's all it is. And that trend is, and that cycle, that trend is already ending. We don't actually need the tariffs that Trump is talking about, but I applaud his willingness to go after this issue the way he has, because I understand politically why it's the easier thing to do. But what he's really trying to do is force a restructuring and a renegotiation of all these trade deals, which is the exact right thing to do, and kick globalists like Gary fucking Cohn and Mnuchin and the rest of them to the curb and depower them. And I honestly think that he's just declared war on Goldman Sachs, and Goldman Sachs is going to declare war on him, and it's going to be a very interesting ride. All right, so I hope Buck watches this one. This is one of our regulars over on Periscope. I hope he watches this, because he'll hopefully eventually maybe he'll get it through his head that these are the real dynamics and this is what's going on. Okay, and this is why I'm fundamentally against tariffs, because they're just a band-aid on a structural problem. They don't fix they're a band-aid on an open sore when the open sore is caused by a freaking virus that's eating you alive. Doesn't change anything. Doesn't level the playing field. Just makes everybody exist in a continued world of suck. And I'd rather the world stop sucking and giving more power to the very worst people on the planet. Okay, you all have a great afternoon. We'll talk soon. Keep your stick on the ice.